Howdy, I'm Max Keiser. This is the Keiser Report. We are in Mexico City, heading south to El Salvador, the savior, adopting Bitcoin standard. Probably Mexico will do the same thing in a couple of years, but let's check in with Stacy. Stacy.
Max, the last episode we talked about the inflation in inflation propaganda. Inflation is still in the news. I think this is going to be the big 2022 theme, as our guest John Rubino said at the end of the last episode, and you continue on that theme in the second half of this episode. But I also want to say that the population of America agrees with Max and Stacy. They also believe, in fact, 2/3 of Americans polled disapprove of how Biden has handled inflation.
That makes sense because he's throwing gasoline onto the fire of inflation. And people don't like that because they're already getting burned by inflation. Why are you doing that, Joe? Joe's an arsonist. He's like, oh, there's inflation burning down the economy. Let me throw gasoline onto it. Or is it actually, chocolate sauce? I don't know. I'm Joe Biden. I'm crazy.
Well, are you saying that he's like putting on the Fire Fest of 2022? Remember that ramshackle fire festival that happened a few years ago? Before the pandemic, long before the pandemic. So, your vague memories might come popping up about it. But the Fire Fest, it's kind of like, the promise is that all this money printing will be great. It'll look fab. It'll look like all these Instagram stars. We're all going to be rich. We're going to be living off our gains. And then, in fact, when you show up at the Fire Fest, well, you're poor.
Exactly. A slice of bologna and 2 moldy pieces of bread sitting on jam-packed into a trailer with 30 other people. That's no Fire Fest. That is the sign of economy in collapse.
The other thing about the economy in collapse is the story that we've been talking about here in Keiser Report for quite a few years is the destruction of the price signals, and that this is part of the underlying misallocation of capital, which has caused all this precarious situation, and how Bitcoin fixes that. But what used to fix that was gold, and we had gold bugs and we had bond vigilantes. The bond vigilantes were taken out back and taken out, by the Fed and quantitative easing. So there are no bond vigilantes anymore. Then you had the gold bugs, but the gold bugs also got taken out back and destroyed. They're not allowed to send any price signals to any participants in the economy. And so I want to look at a story about gold that is remarkable in this age of a fire festival economy where everything is hollowed out for real. It's not that Instagram slick, snazzy sort of lifestyle brand that we're all great. Remember, that's the American dream, and the reality is the moldy sandwich with a few pieces of ham in between. The same thing with gold. So gold used to be the number one price signal. Whenever the price of gold went up, it was telling us, it was signaling to everybody in the economy that inflation was coming or deflation. The Fed was out of control. The government spending was out of control. It was telling you a lot of important things. Well, today, in our economy, in this new economy, investing in Lego more lucrative than gold, study suggests. Market for secondhand Lego also rises at a better rate annually than stocks, bonds, stamps, art, and wine. This is according to a study by researchers at the Higher School of Economics in Russia, and they found that the market for secondhand Lego rises in value by 11% annually, which it says is a faster and better rate of return than gold, stocks, bonds, stamps, and wine.
Right, 11% annually is almost matching the money supply growth, which is about 15% a year. So it's getting close to matching the inflation rate that's really being experienced by folks. And because it's free to trade and there's a big robust market for these secondhand Lego products, I assume on eBay and other sites, it's finding a price that will satisfy the market, and the market is looking for ways to hedge against the rising inflation or the debasement of the currency. Gold, for some reason, or we know the exact reason, hasn't moved more than it's been negative 3% over 10 years. It hasn't moved at all because all the monetary premium is being sucked out of gold. People would rather trade Legos than to own gold. Gold is just simply not attracting any monetary premium whatsoever. Plus, there's no legitimate price discovery in gold. As you said, the gold vigilantes, like the bond vigilantes, were systemically, methodically taken out of the picture by the central banks with their derivatives and their money printing. But nobody's in the central bank, if they could figure out a way, and they probably will, a Lego toy futures contract, that if this Lego gets big enough and the price signal gets strong enough to tell people that the monetary situation is out of control, expect Wall Street to come out with a Lego futures contract and for it to be naked short down in price so that they would kill the Lego vigilantes as they were. But right now, because it's not quite a big enough market, there is no futures contract to kill the Lego vigilantes who are out there buying Legos and showing that the monetary premium of everything in the system is collapsing in the face of this super cycle in inflation.
Well, I might add, just for clarity on that sort of situation, Legos are mostly in the hands of children. And so I think the children would be able to prevent a sort of using the derivatives market to short the price signal sent from Legos. Just like Bitcoin, everybody thought, oh, these futures products are emerging and this is going to crash the price of Bitcoin, just like it crashed the price of gold and suppresses the price of gold.
But what if Lego comes out with a toy that's a Lego version of a futures exchange for kids?
Exactly.
Pretty soon they'll be trading their own Lego on their own Lego futures exchange to satisfy their own hedge against inflation because they notice the price of baby food is going up faster than mom and dad can afford. So it could be very meta in that sense.
Totally meta, totally metaverse. And again, I will say that, they've tried to do shenanigans with Bitcoin, but Bitcoin, the underlying collateral is held by the individuals who hold the Bitcoin private keys. And so with gold, you have the central banks own the vast majority of it. That's why they're able to do what Max was saying there, that they could suppress the price signals. The same with bonds, how they destroy the bond vigilante is back in the 80s we used to have, and 90s, we used to have bond vigilantes, and that was that they would force interest rates up if the government was spending recklessly. And that's because at that time it was considered something that was beyond the pale to do something like quantitative easing, to monetize the debt. There was this notion that could never happen in the United States.
Well, to put this into context, to follow up on your point there, so up until 6 months ago, that buying of bonds to control them from going up in price was called by the central banks and policymakers deflation. And they would say, look, there's deflation, and we need to keep rates low. And give 0% loans to our friends who could buy assets like apartment buildings and stocks and bonds and get fabulously wealthy at the expense of all the money that would have been in a pension account earning interest, right? They stole $5 trillion was moved from pension money to guys on Wall Street. And so that's what they called deflation, was when they were purposefully buying back bonds to the degree where interest rates were not allowed to be impacted by the true market forces that would have told us about interest rates being a lot higher a lot sooner, until about 6 months ago, when that ability to suppress the inflation got out of control and started to show up, and people said, well, it's transitory, and then no, it's actually permanent or on a secular multi-year basis. Paul Krugman at the New York Times had to issue a mea culpa. He said, I had no idea what's going on. I'm giving back my Nobel Prize because I'm a colossal idiot. He actually said in the New York Times, I have no idea what's going on. So that's where we are.
Just so you see how unusual the whole situation is, in which Legos are the only free market available to a wide sector of the economy. It's sending a price signal. It's near matching the inflation in the underlying money supply. Not counting last year, of course, because last year was
all collectibles
different.
like baseball cards and Legos and things like that are all skyrocketing in price. Tom Brady's football, where he hit 600 completions, I guess was the football, it was worth $1 million instantly, and they got it back for $500,000 and all these types of things. That shows you the true nature of what's happening. That's a price signal, because there's no football futures contract available to manipulate the price in ways that policymakers and Paul Krugman can claim it doesn't exist.
Yeah, and it's all like unique little individuals. There's one guy in the audience who captures the ball. There's that one ball. So it's not like the Fed can control the price of it and like prevent it from sending a price signal. But you could see in this next chart how much they've controlled the price signal that used to be the ultimate price signal, and that's the price of money, the interest rates. After adjusting for inflation, the 10-year Treasury yield has moved down to negative 5.4%, its lowest level in history. Lynn Alden did actually point out in a response to this that it's not the lowest in history. It's the lowest since 1941, when we were in the midst of a global war you might have heard about.
Right. The failure to allow bond markets to reflect true market forces has resulted in a bifurcation in the economy where the most corrupt are rewarded for committing crimes, JP Morgan being a prime example. And if you have morals or ethics, you're penalized. If you're not out there stealing and looting, then you're going to be homeless. And that's America today. It's just sad.
Because plunder became a way of life.
Plunder became a way of life.
Plunder is seen, like, when it's not just like, when they're interrupting those price signals, that's plunder.
Yes.
That's a way to plunder your savings, your wealth, your time, your work. It's plunder to suppress and to manipulate the price signal of the 10-year Treasury yield, of gold prices, of the prices all around you. I think it's a way to steal the most valuable thing you have, and that is your time.
Land of the crooks, home of the thieves, America.
Quickly in the last minute here, I guess we'll try to get to this one. The first Bitcoin futures ETF raised over $1 billion in its first 2 days, the fastest an ETF has ever hit that mark. It's down 19% since launching versus a 9% decline for Bitcoin. Why the differential? Contango, where Bitcoin futures price is greater than spot, causing a negative roll yield.
Okay, when they launched that product, and we had Jack Mallers' parents on to discuss this, and I explained to Mr. Mallers that this was a horrible product, that it would always trade at a discount to Bitcoin, that it was not suitable for retail. It's not suitable for anybody, and it shows the wickedness and the corruption of the SEC. He pushed back on this, of course, because he's a futures trader in Chicago, and he would, but I was right. Mr. Mallers, I was right. You were wrong.
Well, the thing is, it's being marketed at retail. It's really something just for professionals who are genuinely hedging something. This is, people think they're getting exposure to Bitcoin price, but they're not. And the SEC, Gary Gensler, refuses to approve a spot ETF, which would have done that. Corruption
is the short answer. And we're going to take a little break. And when we come back, much more coming your way. Welcome back to the Keiser Report. I'm Max Keiser. Time now to return to our conversation with John Rubino of DollarCollapse.com. John, welcome back.
Good to be back, Max.
So in the first part of our conversation, we outlined really what's happening and how to wade through some of the nomenclature and words being used by the popular finance press to obfuscate what's really going on. They use words like deflation when they really mean inflation, and they use words like debt when they really mean money printing. We're in an MMT environment. They're going to print themselves to death and draw us into a war. That's pretty evident at this point. But the question that we left on is, how do you play it? How do you invest in it? So if we're going to construct, let's call it a Benedict Arnold portfolio, or a portfolio of stocks and bonds and investments that'll do well in the face of America's policymakers selling out America and ignoring the Constitution and violating every law under the sun, how do we make money doing it? The obvious choice would be gold, but gold is really looking horrible. What's wrong with gold, or am I missing something? John Rubino.
Max, you're missing something. Gold is doing exactly what it's supposed to do. It's supposed to protect purchasing power in the face of a depreciating currency, and it's doing that. You know, gold was $200 and some at the beginning of the century. It's 17 and $100 and some right now, which means as the dollar has gone down in value, gold has gone up in dollar terms. It's doing exactly what it should. And the way precious metals cycles usually work is you get modest increases while people are trying to decide what kind of a world they're living in. And when they finally figure out that the cycle is inflationary and they extrapolate, 4, 5, or 6% inflation into the indefinite future, then gold and silver have parabolic spikes. And so we're still waiting for that to happen in precious metals, and it'll happen. So precious metals are a good thing to be in, but there are lots of other good things to be in now too. The universe of real assets that governments can't make more of and therefore can't inflate away. It's a pretty big category, and farmland is there, rental houses are there, cryptos now are there really for the first time in a meaningful way. So you can construct a portfolio now in the crypto space that has Bitcoin, at the base, and then lots of companies that are springing up with various kinds of blockchain related products that might be your growth stock. So you could do a crypto portfolio from beginning to end that would probably do well in what's coming. I personally am more in precious metals and the mining stocks. But I'm kind of at this point looking to diversify a little bit further. But anybody who's just getting into this now has a lot of options. So the real point being that, yes, the world sucks right now, and we're heading for chaos in so many different levels and so many different places. But each of those terrible things that we're pointing to are also an opportunity. The flip side of a crisis is an opportunity, and if you identify the opportunity, you by definition have a chance to survive the crisis and maybe even profit dramatically from it. So this, it's not going to be a happy time for most people, but it's potentially a really profitable time for the people who get this right. Watch the movie The Big Short, and you get a sense of what that's like. Some people identified a gigantic housing bubble when nobody else saw it. They placed some bets. They were too early. They lost some money, but in the end, what they thought was going to happen happened, and they made life-changing fortunes. That's out there for people who get what's coming this time around. So not only is this a chance to make a lot of money by getting this right, but it's also a chance to psychologically get through this. Because if you focus on the good things that can happen to your investment portfolio, you're not as obsessed with all the horrible things that are happening in the world. And then that's, I think, a way to survive this in good shape mentally as well as financially.
But there's something wrong with gold. I'll give you 2 data points. Number one, the real rate, which is extremely negative at the moment, is even more negative in real terms than it was during the 1970s when gold made that spectacular move that it did up to the $800 levels, up from under 100. And the other data point would be that Legos, the plastic toy that people as kids play with, that's outperforming gold as a collectible, a kid's plastic toy. Something is wrong with gold, John. I get your point that it's holding its own against purchasing power and all that, but something's very wrong with gold. And what's wrong with gold, John?
Max, there's absolutely nothing wrong with gold. In a bubble economy, all kinds of things outperform safe haven assets. The NFTs right now. There's an art gallery that just sold several $1 million worth of NFTs on art that hasn't been created yet.
Right, but that's obviously a fraud. You can say John, we can't equate gold with an outright fraud. NFTs are an outright fraud. You can't equate gold with an outright fraud. Unless you're saying gold is an outright fraud. Which, I would say that the pricing of gold is an outright fraud, and same thing with NFTs. As far as The Big Short goes, which was a great movie, and there were bankers on Wall Street that made a lot of money profiting from the collapse of the housing market. It's not like everybody didn't see it, or a lot of people did see it, but a lot of people chose not to participate because it's immoral, right? So are we saying that if you have any morality of ethics, you're going to not survive at all in this economy?
No, I'm saying the most ethical thing you can do is protect your family by betting against an unethical system. So,
but aren't you then I don't want to go on a tangent here, but isn't that kind of making the problem worse if everyone thinks that way? You've got a society like Bastiat talked about when fraud and looting become the norm. Everyone is engaged in fraud and looting. When you see it at the top, it's the entire society. When I go to and I see people raiding the Walmart and Target shops and going over to eBay to sell the stolen goods and making money on their thievery, and it's become wholesale and industrial in scale all over a country because they're mimicking Jamie Dimon, they're mimicking Goldman Sachs, they're mimicking the NFT frauds. Is that a good thing?
No, and that's the thing you should be betting against. I mean, gold and silver, and possibly this time around Bitcoin, are honest forms of money. So to the extent that you move your finances over to those platforms, you are acting honestly in opposition to the dishonesty that now rules the economy. So I absolutely don't think shorting this market is in any way kind of an unethical thing. But if we have time, there is something that we could explore on this note, because when you bet against something, you do have kind of an ambivalence about that, right? Because you're betting on bad things happening to somebody. So the way you rationalize that to be a short seller is, if you cause a bad thing to happen and you profit from it, then you're unethical. But if something is going to happen no matter what, you can't stop it. There's nothing you can do about it, and you didn't cause it. You're in a way morally obligated to bet against it to protect yourself and your family. And that's what's happening now. We can't stop the crash that's coming. And we didn't cause the crash that's inevitably coming. But what we can do is bet against it and profit from it.
Well, I'm going to push back a little bit on that, because one thing that everyone can do to erase these arbitrage opportunities where the top 0.1% seem to get richer by the minute is to insist on higher interest rates, right? Because the cost of borrowing money to commit fraud and injustice is very, very low, almost zero, as we were saying in part one of our discussion. Everybody, progressives, right-wingers, whatever your political affiliation, could come out and say, we need to raise the cost of financial terrorism by raising interest rates to a normalized level of around 4.5% to 5%. So everyone can lobby for that, so that we don't have looting becoming the de facto business model of America, John.
Yeah, but they're not going to give us that. I mean, we can ask for that, but we can't get it. But what we can do is buy a bunch of silver coins, or buy some Bitcoin, or look at some DeFi companies that are profiting from the rise of cryptos and buy those. Those are things we can do rather than things we can just lobby for. So I would say let's do what's possible. And while it's not mutually exclusive, you can still ask for higher interest rates. But as you said earlier, in a modern monetary theory world, interest rates are kind of irrelevant because debt doesn't actually exist. The Fed could buy a bunch of 6% bonds off the Treasury and then rebate the 6% interest to the Treasury. And so we would have 6% interest rates, but we would still have effectively zero interest rates for the government. They'll never give us high interest rates because that blows up the financial system. So interest rates will stay low until the market forces interest rates up, which is not something we can control.
So let's take a step back for a second. And, you and I have been in the game for a long time. We can think back to the 70s and 80s when you had a different cycle was in play. But the millennials and the Gen Z, they do not have that reference whatsoever. They've never seen a down bond market ever. They haven't had any difference than this 40-year bull market in bonds, for example. What would you tell those millennials and Gen Z how to prepare themselves? Because not only is it going to, it's one thing to say, well, academically we can say X, Y, and Z, therefore we need to do this. But emotionally, it's going to be tough for them, I would think. What do you say, John?
I would say you can't tell a 25-year-old anything. They have to learn the lessons themselves. When a 60-year-old says, be careful to a 25-year-old, they just say, okay, boomer, and then they go on and do whatever they want to. And you're right, they have never experienced a real bear market. All they know is that tech stocks go up forever and houses go up forever. And, Bitcoin was 45 cents and now it's $60,000. That's what they know. And the only way they can know anything else is to experience the other side of the cycle. And that's something we all have to go through, right? I mean, I think every one of us was an idiot 25-year-old at some point. And yeah, it's going to be brutally painful for these guys in a way that it hasn't been for previous generations, because they have Robinhood right now. A lot of these kids are out there trading, including one of my kids, and they're trading aggressively in things they don't understand. And they're going to get burned big time at some point. Well, that's a cycle of life. You make your mistakes in your 20s, you kind of think about your mistakes in your 30s, and then you become who you're going to become in your 40s. So these guys have to go through that, and there's nothing we can do to help them other than make as much money as we can so we can support the millennials who are close to us going forward to help them get through what's coming.
Well, it seems like the politicians think that they can buy these votes by promising infinite spigot of free money. But I think what I'm hearing from you is that the cycle is coming to a close. Even as soon as the 2022 elections, they won't have that option anymore. The reality will have set in. We've got about 20 seconds.
I think some decisions have to be made in 2022 that are going to be very important going forward. Some of them could cause a crisis right away. Some of them could set the stage for a crisis in the future. Either way, big year coming up.
All right, the legend, John Rubino from dollarcollapse.com, been writing for years about this stuff, been right on the money. And that's where we go to get some timely information. Thanks for being on Keiser Report.
Thanks, Max.
All right, and that's going to do it for this edition of Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank our guest, John Rubino. Until next time, bye, y'all.